Okay, I think you can just about see me there, and that's the panel that we've got on for you today. So the agenda is we're going to do an introduction to the Growth Hub and what is debt finance and government finance schemes update on local grants. That will be done by myself. Then we've got debt finance with MSIF, which is Merseyside Special Investment Fund, why your business credit rating is important and how to improve it with Lightbulb, and access to finance with Blue Orchid. And then finally, we've got a panel Q&A quick question and answer session. We can get my words down. Next slide, please, Tom. Okay, bit about the Growth Hub. Hopefully anybody that's come on the event today has come across the Growth Hub before, but it's a free and impartial service funded by the government. It's part of 3 specific LEPs. You've got Cheshire East, you've got Cheshire West and Chester, and you've got Warrington LEPs that are covered by the Growth Hub. And we work with over 200 partners, so it's not just taking advice from anybody that actually works from the Growth Hub. We can pass you on to authorised partners who can provide more specialist advice. And we work with businesses no matter what the size or the sector, and our service is bespoke to you and your business needs. And we provide a range of services that can help business growth. And some of the areas that we've focused on, not just in the last few years, but since the Growth Hub has been here, is obviously coronavirus, and that is still continuing, exporting, finance, which I major on, growth, and we've got Sherry Semper today, who specialises in growth and innovation. We've got HR, innovation, peer networks, skills and startups, pretty much covering all aspects that we could help business on. And we're not tied to any specific time. We can, in theory, work with you as long as we need to. So I just really need to emphasise that we are here to be used, and please get in touch with us. So next slide, please, Tom. Okay, there, we'll be sending these out, so you don't need to quickly write that down, but those are our contacts of either email and our website. So next slide, please, Tom. So what is debt finance? So I joined the Growth Hub in May of this year after a long career in business banking, and latterly, probably last 10 years, I've worked a lot in alternative finance. So I would consider myself a business finance specialist. Haven't got all the answers to every single question. I'll always do my very, very best to help you, and there's not many situations that I've not actually have to handle. So I would be the first point of contact and effectively your account manager if you came in to speak to us about debt finance or any funding issues. Next slide, please. Okay, what is debt finance? Well, a clear definition, and this is actually on I've seen this from on a business banking website, actually, British Business Bank, and it's money borrowed to use in the business, paid back with interest and fees over an agreed term, includes loans, overdrafts, asset finance, and invoice finance. And basically, the British Business Bank have issued a managing business debt guide, which is available, which is 52 pages. Now, obviously, I'm not going to go through that with you today, but I would recommend that it would make really good reading over half an hour or so, just to access their website and have a look at that. So next slide, please. Okay, I'm quickly going to go through some of the government support schemes, but we've got Andy Jones in our MSIF slot next on, who will go into some of these in a bit more detail, specifically the recovery loan scheme. But the bounce back loan scheme is now closed for applications. That was the initial support loan that the government brought out. And I've not put all the details on there, but my advice would always be, even if you think you're ready to pay that off, don't pay it off unless you're absolutely certain that you're ready to do that as a business. It's 2.5%. It's not going to change. It's not going to go up, and you've got lots of variable advice and ways of repaying that, and that would be provided for you by your bank that drew the loan down. So please follow those, and there's 3 options. The coronavirus business interruption loan, which is commonly known as CBILS, that again is closed for applications. That was a follow-on from the bounce back loan scheme, Now I've put down on here that a 6-year repayment term, which was initially the repayment term, but like the bounce back loan, that has now been extended out that you can repay that for up to 10 years. So again, the government is making steps to smooth repayments out for businesses that can't afford to maybe start on full repayments for those schemes. And the recovery loan scheme, which is still available and has just been extended a couple of weeks ago through to the 30th of June 2022. Interest and fees are paid by the business from the outset, which is different to the bounce back loan and the Corona and the CBILS loans, and repayment terms up to 6 years. And Andy will be covering more details on how to apply for that. And I'm available for any advice as well going forward. So next slide, please. Okay, I'm just going to run through some of the funding that's provided through the Northern Powerhouse investment funds and supported by the British Business Bank. This by no means covers every single way that you could borrow a business, but these are the go-to partners that we've got available to pass you through to. And the startup loan scheme, really, this is a loan for not just startup businesses, but for businesses in the first 2 years of the actual start of the business. So, and quite often that gets missed. So if you are still eligible for that, then you won't get a better rate of interest at 6% that these loans are provided at, and there's no fees. But it's not on here, but that is a maximum of £25,000 per individual in a business, like director or shareholders, and it's a maximum of 100,000 per business. So obviously that would be the maximum if it was approved at that maximum amount for one business would be £100,000. So next slide, please, Tom. Now these are some of the funding that's available through the Northern Powerhouse, and they split them into different sections. There's microfinance, 25,000 to 100,000 for startups and growing businesses. Debt finance, which is basically staging on from there for established businesses looking to borrow 100 to 750,000 pounds. And some of them can also look at equity finance. And again, I'm not going to go through and tell you all of that's available, but these are all available on the Northern Powerhouse Investment Fund websites. And we have got one of the providers of this finance in MSIF today to go through this in more detail. Next slide, please, Tom. Okay, I've covered the recovery loan, so I won't say anything else about that. That will be covered in our next section. And we did do an angel investment, well, an investment webinar 2 weeks ago, where we covered the fact that we can advise on angel investments, and I can provide advice on that as well. But we won't go into that in more detail today because we're doing that 2 weeks ago. So next slide, please. Okay, last bit before I pass over to Andy. These are what I would go through with any client, new client business that came through to me through the Growth Hub, and it's really just a bit of just general due diligence and preparation for any good lending application. So it starts really with a relationship with your bank and your accountant, and you must go to your bank first and foremost. Now, I've worked in banking for a long time, and we obviously know that the banks are not going to be able to say yes to all applications, but please approach them first. If you've got a loan requirement that would fit the recovery loan scheme, we always advise go to your bank first, mainly because they know you best, and also they're going to give you the best rate of interest if they could do the loan. But you've got to have said that you've gone to them before we can start approaching other lenders. So, and your accountant is really a good level of support in the next part of my of this section here, where I've covered on financials, annual accounts, management figures of up-to-date performance of the big business. And any business should always have a 12-month projection of your financials to see where the business is going, but you certainly need to provide them to any funders for the recovery loan or any loans going forward. And that's really to prove that the loan repayments can be repaid by the business, and also other debt, for example, HMRC taxes up to date, and any of the other existing loans the business can afford it. And that's where you need to actually provide the extra information going forward to prove that your figures going forward in the future will be, if you're looking for an improvement, how you're going to get that improvement, and perhaps advising and providing some level of proof around, say, new contracts and that sort of thing for that area. Now, we've got a specialist in Lightbulb today to talk about credit ratings, specifically business credit ratings, but your business and personal credit ratings are very important for loan applications. It's part of the algorithms that the funders actually put into the system to see whether the computer would say yes or no. Hopefully there's a human being to talk to around that, but some of the lenders, will really hone down on your business credit rating. So it's important that you look at that and improve it wherever possible. And then finally, refinancing. We'll work together on all options to spread out the finance. And like I've said, on the existing government loan schemes, I think the government's tried to do that to make that more palatable and easier to repay over time. But there might be other areas that we could look at, for example, raising cash against business assets inside or outside the business. And as I say, I cover all of that on a due diligence that I would do for all businesses when you first approach me before we put you to a lender. So next slide, please, Tom. We've now got an update on the current situation with grants. We get asked about grants all the time. Cheshire East Council have got the Business Recovery and Growth Grant, the Business Interruption Fund. They both closed for applications on the 17th of December. Now, these are a competitive and subject to application, not a given. You've got to apply online, and it's pretty straightforward and simple to find the application, then follow the instructions on there. So next slide, please, Tom. And Cheshire West and Chester Council have got the Investor Fund, the Training and Skills Grant, the Start and Scale Up grants, and they've got a launch event on the 2nd of December. And again, there's limited availability for this, and we will keep updated on our systems and our communications to always advise you on what changes or what new grants are available going forward. And last slide, please. Warrington Borough Council have not got anything presently. They've allocated their grant funding during previous rounds, but like I said, things do change, so it's always worthwhile keeping up to date. And again, we will send updates out to clients that are registered on our system and put it on our social media. So next slide, please, Tom. Okay, that's enough for me for now. I'll come on and introduce each section as we go off, and then I will go off. But I want to introduce Andy Jones, who is an investment manager and part of the Northern Powerhouse Investment Fund, working for MSIF, which is Merseyside Special Investment Fund, and a wide range of funding to businesses across the Northwest. Before he comes on, I must say Andy's got a bad cold and he's a real good trooper that he's come on. So switch your camera on, Andy, and over to you. Andy's obviously having problems to come on.
Oh,
I can't see.
Camera's on, and I've unmuted.
Here we go. Right, over to you, Andy.
Can we change the slide, Tom, please? Thank you. Good morning, everybody, and many thanks to Dave for the opportunity of talking to you today. Apologies for the throat and the continual drinking of water, but we'll get through it, no problem. My presentation is entitled Debt Funding and Investment Readiness, and really picks up on the comments that Dave's made in his introduction. I don't intend this to last any longer than 15 minutes, so you'll be pleased about that. Debt funding is provided by many lenders, and I intend to share some information about the different types of funding, as well as providing details of some of the government-backed schemes that Dave has already alluded to. Following on from that, I'll talk to you about what makes a compelling proposition in terms of the key aspects that a lender such as ourselves looks for to show that a business is investment ready, and one which we would like to become involved with and support going forward. I'll finish with details of a Chester-based startup business that I supported alongside MSIF during lockdown. and hopefully this will give you a flavour of the types of propositions that we're able to help. Firstly and briefly, I'll tell you a little bit about MSIF and what we do to support businesses across the Northwest, including Cheshire and Warrington region. Next slide, please, Tom. In case you don't know who MSIF are and what we do, we've been providing funding and support for local businesses for over 27 years, supporting many businesses across the Northwest that for whatever reason were unable to obtain funding from the likes of the high street banks. You can see from the statistics the impact that we have had during that time, supporting over 2,300 businesses, being able to safeguard and create over 16,500 jobs, and providing the significant amount of funds that we have lent and the significant amount of funds that have been leveraged from the private sector as a result of our interventions. Focusing specifically on the Cheshire and Warrington region, we've supported well over 100 businesses, provided funding of over £1.5 million and created and safeguarded over 1,200 jobs. MSIF has helped businesses at all stages of their journeys, from starting up through to more established businesses looking to grow, right up until the point where any investee companies have floated their shares on the stock market. Our loans start at £5,000 and the maximum we can invest currently is around 2 million into one business. We provide funding for a wide range of purposes, including initial pre-start and startup costs, capital expenditure for equipment or other assets, working capital funding to help with cash flow, perhaps for increased staff costs as a business grows, as well as providing funds for acquisitions, management buy-ins and management buyouts. As well as MSIF's own funds, we have a number of different loan funds that we manage and deliver with partners. We have partnered with the Combined Authority in Liverpool, the British Business Bank, who Dave has mentioned earlier, and the Responsible Finance National Network. This has helped us to be able to put together relevant, affordable funding packages to meet the needs of local businesses. At MSIF, we pride ourselves on the level of personal service we provide, and this has never been more important than during the last 18 months of the pandemic. We understand how frustrating it can be to get in touch with the right person to discuss your financial situation. So every business that comes to us that we are looking to provide a funding solution for works with a designated investment manager such as myself, taking you all the way through the process, right from the initial inquiry through to the day you receive the funds. We then also provide post-investment support by way of a designated team to stay in touch and help you along the way. This will include working with local business support partners, for example, Dave and the team at Cheshire and Warrington Growth Hub, to make sure all businesses are aware of the extensive support that is available in their region. Quick drink, Tom, please, while you change the slide. Thank you. I will now talk about some of the debt funding options that are available to businesses in Cheshire and Warrington and nationally. And I mentioned to some of the other lenders who MSIF work with on a partnership level, and this really builds on what Dave was saying before. If you're a new business, less than 2 years old or still at the planning stage and haven't started yet, then you should consider looking into funding from the government-backed startup loan scheme. This can provide eligible businesses and their owners with loans up to £25,000 at a very competitive interest rate of 6% fixed. There are no arrangement fees or security having to be provided for this loan. The loan is made available to the people behind the business rather than the business itself, and our partners at GC Business Finance, based in Manchester, manage delivery of the startup loan, and you can access this support by initially contacting Cheshire and Warrington Growth Hub. It's worth mentioning that there is a specific startup funding seminar coming up in December in conjunction with our friends at Blue Orchid, and you'll hear from Fraser later on. I would urge you to consider joining this event if that's relevant to your circumstances. You may have heard of the Northern Powerhouse Investment Fund. Well, you have, because Dave has mentioned it this morning. This is support for small businesses looking for growth funding and to support working capital needs. Loans are available under the microfinance scheme from £25,000 to £100,000. The provider of this funding locally being ourselves and our partners at GC Business Finance in Manchester. If you're looking for a higher figure than this, loans are available between 100,000 and 750,000, and these are delivered by our colleagues at FW Capital. Introductions to these other lenders can be provided by Dave and the team at Cheshire Warrington Growth Hub. It's worth mentioning at this point the support that is available from the government guarantee schemes. Currently, the recovery loan scheme, as Dave mentioned, is available to businesses who have been significantly affected by COVID. Rather than the owners or the business themselves providing the lender with security, the government guarantees the loan up to a maximum of 80%. This is for loans up to 250,000 where no personal guarantees are required. Over this level, lenders will be looking for tangible security. Please bear in mind that the scheme changes on the 1st of January and the level of government guarantee drops to 70% until the scheme expires on the 30th of June 2022. So if you're looking for support under this particular scheme, you really do need to consider getting this in motion as soon as possible. Your bank will also offer business loans, and it's worth, as Dave said earlier, looking into the options that they have. A lot of the lower amount loans are handled via telephone or online banking routes. Some of the challenger banks or online banks offer loan products, although some only provide bank account facilities rather than actually funding to support and grow your business. If you go online and search for small business loan funding, then you'll be presented with a list of online lenders who are specifically set up to provide loans, but with a light touch from a personal perspective. The entire process is handled electronically, and the key is providing accurate, detailed information that will be entered online. These lenders use algorithms to make lending decisions rather than taking into account any additional information that may come through a face-to-face discussion at your business premises. That's why it's always worth looking for alternatives as well. As I briefly mentioned, there are a number of options available to businesses in terms of funding, and to help you to decide which is the best route to take, then I'd strongly recommend discussing your needs and requirements with our pals at Cheshire Warrington Growth Hub. They can guide and help you to seek out the most appropriate providers of funding based on your own individual business circumstances. Excuse me. Now I'm going to briefly talk about what makes a good lending proposal and what lenders are looking for to be able to provide the right level of funding in the right way to your business, regardless of what stage it is at. Next slide, please, Tom. Thank you. To become investment ready and to make your business proposition compelling to a lender, then you need to have a comprehensive, well-researched business plan which tells the story of who you are, what you do, how you do it, and who your customers are. You need to clearly explain what the funding will be used for and how it will benefit your business and the impact it will have to enable the growth that you are forecasting. A brief description of the history of your business is always a good starting point. You should explain who owns the business, who the decision makers are, and talk about the experience that your management team has in your chosen industry. Lenders will want to know how your business has been funded to date and what commitments are outstanding. An executive summary covers the investment opportunity, detailing what you will use the funds for, how they will be repaid, and who is responsible for delivering your financial information. And most importantly, how all this links to the objectives and aims of the owners and the business. A well-researched evidence market analysis provides the opportunity for you to explain what markets you are currently in, who your customers are and why they choose to buy from you and not your competitors. What is your unique selling point? How do you compare against others in the marketplace? Under the marketing section, you should explain clearly how you reach your potential customers in order to advertise and promote your service or product. If you're a startup business, you'll need to explain where you will get your customers from and provide any letters of intent that your customers might have to buy from you when you start your business up. Evaluating and mitigating risk is a key part of the decision-making process that a lender will use to decide whether or not to provide funding for your business. A SWOT analysis is something that helps you to consider all areas in terms of strengths, weaknesses, opportunities, and threats. We're currently living in very challenging times for all businesses, and this situation is something that nobody could have foreseen. But how are you coping with the impact of COVID-19 on your business now and going forward? What support have you obtained from both government and your local growth hub? Another potential impact at the present time is Brexit. If your business exports or imports, you should consider how Brexit will affect you and how you'll deal with this. Climate change and net zero in terms of carbon emissions are a key factor for businesses to demonstrate their commitment to reducing their own carbon footprint. What are you doing within your business to change this? A business plan won't have all the answers, but it does provide a lender with invaluable information about your business and will help them make an informed decision as to whether to lend you the money you're asking for. Alongside your business plan, a lender will want to see financial forecasts, and it is essential that the information in your forecast matches your business plan. I've seen differences on many occasions, especially where one party has written the plan and another has produced the forecasts. This is really confusing and can waste time establishing what is the correct information. It is up to the applicant to double check that there is clarity between the two before they are submitted to make everything is in order. On the subject of the financial information, a lender is likely to want to see 3 pieces of financial detail: historic financial accounts, management information covering the current trading period, and financial forecasts. Financial accounts are a summary of the way a business has operated during a 12-month period, with the majority of this information being in number format. The full financial accounts, including notes, are vital information to a lender. A lender is really looking at the historic performance of a business to provide some comfort to their lending decision and to prove that the business can afford to make the new debt repayments by just carrying on trading as it is. A profit and loss account shows the performance of the business and shows whether your current operations are generating sufficient revenue to cover all of the existing overheads. The balance sheet shows existing debt that may exist, whether the company is trading solvently, and whether there are any loans outstanding to the directors, owners, or associated companies. Ideally, you will have 2 full sets of financial accounts here. Management's information is usually a profit and loss account and balance sheet for the current trading year, i.e., since your last year end, and showing the most up-to-date monthly business performance. A number of software systems are available to provide this information, which link to a company's financial management systems, i.e. Sage, Xero, or QuickBooks. Any business which requires a lender to provide funding will be required to produce financial forecasts, normally in the form of an integrated profit and loss, balance sheet, and cash flow. The 3 parts must be integrated, meaning that if something changes in the cash flow, it has a knock-on effect in the P&L and the balance sheet. The hardest part of any forecasting is being able to accurately and realistically predict the sales or revenue that will be achieved. A business owner will generally have a pretty good idea what profit margin they're looking for and what the overheads of the business will be. However, getting the revenue right is key to making the forecast realistic. It is vital that the assumptions made for the revenue of the business are detailed and can be scrutinised by the lender. This gives the business the opportunity to demonstrate that it can service the new loan repayments alongside existing overheads. The third and final element of investment readiness is the management. You may have the greatest business idea and the greatest business model, but lenders are far more likely to look at your management team to see if you have the right people leading the business towards its objectives and the right team dynamics in place to drive the business forward. Alongside the business plan and the financial information, you should provide up-to-date CVs for the decision makers within your business. Experience within the industry is key, alongside past performance and the management's influence over the results of the business historically. Anti-money laundering and personal credit checks will be undertaken. Excuse me. And in the spirit of openness, we always suggest any issues in this regard are flagged at a very early stage in discussions. Just because a historic event or event has affected somebody's credit, this does not automatically rule them out for being considered for funding by MSIF and some other lenders. A detailed explanation of events and confirmation of actions taken to sort a previous issue may well provide sufficient comfort to continue with the appraisal process. Now, I know I'm running over a little bit, but I've just got another couple of minutes, Dave, and I'll be done. Bear with me. And now, finally, I'll talk about a case study very briefly. Startup business based in Chester. We were approached by a former associate solicitor from a well-known Liverpool law firm who had recognised a gap in a market outside of law and decided during lockdown to change career completely and set up our own bridal wear business. In terms of investment readiness, we were presented with a comprehensive, well-researched business plan brought to us by a committed and passionate entrepreneur who would work with local business advisors to put together realistic and sensible forecasts. The total proposition was for £80,000, with the owner committing £20,000 of her own funds and was looking to borrow the other £60,000. Using a combination of £25,000 from the startup loan and a £35,000 loan from ourselves at MSIF meant the owner's dreams could become a reality. Having originally supposed to open in January 2021, COVID restrictions meant the business was only able to open in April 2021. Nevertheless, pleased to say that sales have exceeded the realistic forecast originally put forward, and the business is growing steadily. Final slide, Tom, please. Many thanks for listening and putting up with my coughing and spluttering. If you'd like to have a discussion about your own circumstances within your own business, then my contact details are now on the screen, and I'd very much like to hear from you. So I'll now hand back to Dave.
Okay, Andy, thanks very much for that. And yeah, like I said to you this morning, when I knew how bad you were yesterday, you're a real trooper for coming on, and that was extremely well communicated. So we'll move on to the next section, please. So next slide, please, Tom. We've now got James Piper, who's the Managing Director of Lightbulb Credit, who provide business credit ratings, review, repair and monitoring service. I must say, get ready to see what he's got in the background. And all I would say about that, there are other teams available to support in the region. So with that introduction, I'll pass you over to James Piper. Thank you.
Thanks, Dave. So yeah, firstly, apologies. My background sort of portrays my football allegiances. I would ask for your support and condolences at this very difficult time for all Man U fans. I'm sure if there's some Liverpool fans tuned in, it'll be warming your heart to see me quite as distressed as I am. But let's move on to the business credit ratings. And Tom, if you could bring up the first slide, and I'd like to pick back on Andy's presentation about getting yourself funding ready, and the purpose of this call, this WebEx, as you will, is a lot of these decisions are being made, and you can put together all of the financial information, but there will be an element of credit checking going into this. So what I intend to talk to you about briefly is how credit ratings impact your business and what can be done to improve them. So next slide, please, Tom. A very brief agenda of what we do, why ratings matter for SMEs, how we've developed this unique proposition, a bit about our background. There is a review stage, and then there's the repair process, then a brief sort of piece on next steps and summary, and then some contact details for us. Next slide, please, Tom. So what do? We badge ourselves up as whole market. It's a very fancy way of saying we work with all of the rating agencies that are out there that are making credit decisions and being used by decision-making bodies, whether that's funders, whether that's trade bodies that give you working capital, or whether that's people who you are tendering for work with. So Experian, CreditSafe, Equifax, Graydon, Dun & Bradstreet, and we now work with Red Flag Alert. Next slide, please, Tom. So why do credit ratings matter? I mean, during and since COVID, more credit rating searches are being run on businesses than ever before. There's two reasons for that. The pandemic has caused people to be more aware of their financial risks. And one quick way and easier way of doing that is to look at who owes you money and what their credit ratings are. Secondly is the involvement of web-based sort of trading platforms such as the CreditSafe, Experian, Equifax, and the development of these, and lower costs in licensing. So why do credit ratings matter? If you're applying for a funding event, which is what today's really largely about, someone will be looking at one of those rating agencies and assessing whether you hit the hurdle rate. Better access to trade credit. This is whether you can get 30 or 60 or 90-day terms from your suppliers. They won't make that decision based on no data at all. They will use some element of your trading history, but also what the current market view is using the rating agencies. Balance sheet improvements. Well, if you can pay people on 30, 60 or 90 days, your cash stays in your bank for longer, which is a significant balance sheet improvement. Access to trade credit insurance. So the likes of Euler, HCC, Atradius, Cofas, and others are available. But trade credit insurers will use ratings, especially for SMEs where they don't have access to detailed financial information. It enhances your reputation. We had an example in our region the other day where a local authority was served notice on an electrical contractor because they weren't able to renew the tender for their work. So the guy, Neil, who was the MD and owner of the business, worked with us. We improved his credit rating, it enhanced his reputation, and he was able to tender for the work and renew his contract with the Unitary Council. Next slide, please, Tom. So what is it that we do that's unique? So our background here at Lightbulb, my background is in corporate treasury. I was at Barrett Developments, the house builder, during the 2008 house price crash, which, as you can imagine, was a lot of fun from a working capital perspective. Lightbulb has been trading now for 3.5 years, and we really help and focus on helping SMEs now. So we can share, as Andy put together, when you're putting your finance pack of your previous trading, your financial year to date, and your projections for that's a balance sheet, cash flow, and P&L, that information is great because a funder is able to make a decision based on those things. But the second part of that is a funder will be using a rating score, such as Experian, Equifax, or even CreditSafe potentially, in the background to support that decision. What we do is we share that non-publicly available information with the rating agencies under an NDA. So they get to see effectively your funding application or your business status as is, your growth projections, your contractual revenue, what's going on in the business. Because at the moment, an SME can file very limited information. So micro entity accounts, which is a balance sheet. And you've got 9 months after your year end. In fact, during COVID, you had 12 months during your year end, following your year end, sorry, to file that data, which means the information's not the most timely. So what we do that's unique is we're able to share that information under an NDA, doesn't form part of your publicly viewable data, and we structure our proposals on a no win, no fee. We don't like that. We like to call it a success fee. We work with all of the agencies, and we can do this in as little as 48 hours. It takes 5 days with some of the agencies. Also, challenging payment data and other erroneous. When you're dealing with information that's coming out of the sausage machine that is the company's house data, and then it's going into the ratings agencies, there can be errors. And, you know, we see it quite commonly in payment data. We had a guy back end of last week, he was showing us 240 days past due because someone was saying that he owed Vodafone some money. He didn't. He'd never had a contract with Vodafone. So our process can actually provide insight into that and then challenge and remove these erroneous data points. Just going to grab a drink. Next slide, please, Tom. So what is it that we provide? We provide you a free credit overview, shows your current credit rating, the recommended credit limits across all of those agencies, the trajectory of these, as in the last 12 months, what's the max min that these have been, the volume of credit searches, which actually is really key to show how sensitive your business is to credit searches and seeing how many people are actually checking your credit worthiness. The key piece here is the days beyond terms. As I've just said, you know, there is a lot of unpoliced information being shared about payment terms and adherence to payment terms. We're able to provide you with an insight to that, but also challenge it as well. Volume of invoices, again, that ties with the sort of two main points above. How many people are interested or sharing data about how you pay your invoices? SIC code. This is a key piece. What sector you're classed in gives a massive indicator in what risk, especially for SMEs, because you are bundled into an algorithmic bucket. And the example we always use is We had a specialist manufacturer from the West Midlands who was working with us. He made specialist connector pipes for the oil and gas industry, hugely profitable, 6-year order book. His company secretary was his sister-in-law, and she filled out his confirmation statement and she got his SIC code wrong and classed him as a rice grower, which is a fairly challenging business in the Midlands, I believe. So once we did that as part of our analysis and highlighted this, that he wasn't a rice grower, and then corrected it, his rating improved. So basic stuff, but we do this as sort of like the roots up. Next slide, please, Tom. Okay, so the repair process is quite simple. All of the things that Andy talked about in his presentation around your financial data, your P&L, your balance sheet. We then have a very simple template. It's less than 40, 50 minutes to fill in to explain what's going on in the business, the market overview, the ownership and funding, any directorship changes, which are viewed as significantly negative by the rating agencies, and any contractual revenue. So again, this does not impact your publicly viewable data, and it's all covered by our NDAs. So, you know, everyone in your inner circle who has access to company's house isn't all of a sudden going to be able to see your detailed financial data. And that's really important for SMEs, maintaining their discretionary data, as it were. Okay, next slide, please, Tom. So just some very recent examples. So roofing company, we moved their rating from 7 out of 100 to 68. Their recommended credit limit moved from 0 to 34K. This came through a funding broker, and it led to the loan approval within 48 hours. Moving below that, this SME, Reg, the FD there, was an interesting character to deal with, but really got it in the end. He was quite skeptical when he came on board. We moved his rating from 49 to 100. His credit limit improved from 19K to 78K. But more importantly, he was then over the 60 out of 100 hurdle rate for tendering. And he's won 550K of air conditioning work on a significant infrastructure piece that's going on in the Midlands at this point. The surveyors, so rating improved from 15 to 94. The credit limit moved from 0 to 37K. Again, a loan approval within 7 days of rating improvement. They're a testimonial case on our website as well. Fintech startup. So this, you know, we don't have to share filed stat data. We can share 12 weeks of trading data to give you, which is why for a growth hub and startups, it's key to access working capital, good rates of finance. This example, we moved from 34 to 76, enabled them to get a lease and fund some new premises and equipment. So next slide, please, Tom. I'm aware I'm getting close to time. So we provide a free insight report. Where there is some help needed, we provide a no-win, no-fee solution, or we make a structured proposal so you only pay for the value that's delivered. Ratings are more important now than ever before. I think, you know, Andy talked about algorithms being used in decision making, especially in the SME sector. There's a real focus on computer says no. Well, we can help if the computer has said no, the computer saying yes. Having a whole market view is vital. So if you've got a CreditSafe subscription or an Experian or an Equifax or a Dun & Bradstreet subscription, having that singular view is great. It's a great place for you to check your customers and your suppliers' creditworthiness. What we do is we provide a whole market view. And I think when you're going out to a panel of funders, that's a vital insight. We've got a 100% success rate. Yeah, we're very proud of what we do. Next slide, Tom. So if you'd like any further information, my details are on there. It's very simply James at Lightbulb Credit, and my COO is Oleg. Please don't call him Oleg. He hates that. And please feel free to contact us. We can provide some credit insight, and yeah, happy to support the growth hub. How have I done for time, Dave?
To be honest, James, you're spot on. I think Andy just went. I think I went over a little bit, and Andy did as well. But I think you've pegged us back now. So yeah, we've got a chance now. We could score a winner in this last 15 minutes.
Well, that's unlike our football team, Dave. Unlike our football.
So thanks very much. You can have a rest and go and recharge your glass of water now, James. So thanks very much for that. Next slide, please, Tom. Okay, in the last of our sessions, but not the least by far, that we're going to introduce you to Fraser Kearney, who's the director at Blue Orchid, who are providers of business advice and support programs in the Northwest for startups and business growth. So without further ado, Fraser, I'll hand it over to you.
Hi everyone, I hope everyone can see me and hear me. So yeah, my name is Fraser Kearney. I'm one of the directors from Blue Orchid. And I don't know, many of you might know me, but we've been providing business growth and business startup advice within the Northwest for more than 20 years, which is far longer than I've been with the company, obviously. Next slide, please, Tom. Oh, actually, can you skip this one as well? So yeah, we've been delivering startup support across a range of programs, and across Cheshire and Warrington over the last few years, we've been delivering a lot of grants for the SMEs, and that covers a range of activities from supporting growth programs internally within SMEs to some energy efficiency and low carbon grants, and then a lot of recently over the last 2 years supporting the LEP and the RDF program across Cheshire and Warrington with COVID response grants, whether that's capital grants to install equipment which would support social distancing and adhering to government legislation, and or revenue grants to support SMEs in preparing for growing out of the restrictions. So we support a lot of tourism businesses in trying to look for new markets or rejig their e-commerce and their websites to try and attract UK visitors as things opened up. So overall, we've given out about nearly 3 million worth of grants over the last 4 years, I think, covering those range of activities. And we currently still have a number of grant programs available, which I'll talk to briefly now. So if you can move on, Tom. So at the moment, we have a couple of grant programs to support SMEs in Cheshire and Warrington. One, we're working with Taurus Housing and a number of other housing partners across Cheshire on a Springboard Cheshire project. Our role within that is to support SMEs find new employees coming out of the larger Access to Work program that Springboard and the Housing Association are delivering. And with that, there is a small grant to support a trainee placement, a 13-week trainee placement. It's not a great deal, £750, but it is there to support some of the employment costs. And we also support with the recruitment activity, trying to find a suitable employee, which at the minute is quite tricky. I'm sure a number of you will know. We're also delivering for Cheshire West and Chester Council their investor fund, which Dave alluded to at the beginning of the event. That is part of the government's ARG funding for councils. And so we're delivering a £400,000 grant fund for Cheshire West businesses. It's going to be really, those are really focused on sort of growth opportunities. So we would expect to see some planning for significant growth coming out of those grants, largely tied to an evaluation on sort of the increase in turnover and the increase in employment that might be resulting from those projects. But those are 80% grants, up to a 30,000 grant value. So they're fairly chunky grants, and they're, but they are target only for Cheshire West and Cheshire businesses. And as a process, there's a sort of diagnostic visit by one of our business advisors who will come and sort of talk through the background of your business, but what you want to do, what kind of projects you're looking to invest in, and you might be looking for the grant support with. Other areas of your business that might need some support, which we then feed back to the local authority and other partners, so they can try and identify other areas of support, and then a grant process. And It's a retrospective grant, so you would need the funding to be able to cash flow that project and then claim the grant afterwards. Next slide, please, Tom. And then we have across the whole of Cheshire and Warrington, we have what is currently titled the Cheshire and Warrington Access to Finance and SME Grant Programme, which is the main reason why I'm here speaking to you today. So again, that includes a small grant element, but it's available to all Cheshire and Warrington businesses. It's a 33% grant towards consultancy projects. So that can cover a range of things in which you might need an external expert to come in. So the development of a new sales and marketing plan for looking into moving into new markets. We support a number of companies identifying and installing ERP systems or CRM systems to improve productivity and processes within their system, tie in different departments, and just generally improve efficiency. We've supported a number of businesses who are working towards accreditation skills, so ISO, that kind of thing, to allow them to access different client groups. So moving to supporting blue chip companies or public sector opportunities where they need to be able to show that they've got recognised processes and systems in place. And those grants are up to £15,000. So if, for instance, if you had you're looking at a £45,000 spend, then you could apply for up to £15,000 of that. Again, it's a retrospective grant, so you would have to be able to fund the work and then recoup the grant towards the end. But the other elements of that project are probably more relevant to what we're talking about today. So following on from working with the Growth Hub, we'll be delivering a range of access finance seminars and workshops following on from this, which Andy's alluded to. The first one is going to be financing for startups and early stage businesses. And I'll talk a bit about that in a minute. And the other element to our access to finance and grant program is one-to-one consultancy. So within that, we have the capacity to pay for up to 2 days of bespoke one-to-one consultancy with a professional management consultant who has some experience of supporting companies in financial and growth planning. And the aim of that is that that will support you in putting together some of the things that Andy talked about in terms of making an investment readiness case. So where you might want some expertise in to help go through some of those documents, some of that financial information that Andy talked about. We'll cover some of the costs of that as part of the project. Next slide, please, Tom. So yeah, the main purpose of being here is to talk about some of the events that we'll be running in the new year about access to finance, picking up from the brilliant work that Dave and the LEP team have done. So the next event is the one on 16th of December, and that's, I said, finance for startups and early stage businesses. So we have a number of speakers at that. Our own in-house finance advisor, Mike Byrne, he's actually from our Midlands team, but he's a background in accounting and supporting businesses with some of their financial planning. He'll deliver a quick run through of some of the basics of financial control and identifying and applying for finance. Talk a little bit like Andy did about the issues with cash flow, profit loss, the financial documentation that you need to have in place, how you go about getting all that in place prior to applying for funding. So he'll go through that in a little bit of detail. And then we have speakers from GC Finance who'll talk about the Startup Loan Fund in a bit more detail, answer some questions that you might have about applying for startup funding. We'll have speakers from our own project in which we have grants, and also Chester University's Cheshire and Warrington Business Growth Programme. We'll also have grants available for startups and early stage businesses to support growth. And then we'll have a speaker from NatWest who will talk about some of the high street business banking solutions for raising early stage finance and startup finance through the high street banks and how you go about doing that. And then following that, in the first part of the new year, we've got the events you can see in your screen plan. So in January, we'll be running a seminar on funding for growth. February, we're going to cover some of the innovation and funding that, so R&D tax credits, and how you go about applying for those, what those are in general, and what benefit they can have when you're looking at making some investment in innovation. The Tier 1 investor scheme will be joined by one of our associate organisations who will talk about that and how that might be a route to finding financial investment from an overseas investor. And in March, we're going to cover some of the